This is a letter released to the shareholders this morning from Bill Ackman, July 19th, came out on their website. So they're basically talking about how our board of directors unanimously determined not to proceed with the Universal Music Group transaction. Basically, they're saying the PSTH or the Pershing Square Tontine Holding stock, the SPAC, it's not going to be merging or purchasing the 10% stake with Universal Music Group. However, Pershing Square, the parent company, they are still continuing with that transaction and assuming the indemnity agreement with Vivendi. That's something interesting. They're basically causing this issue, or they're blaming the SEC for this. Our decision to seek an alternative initial business combination was driven by issues raised by the SEC with several elements of the proposed transaction, in particular, whether the structure of our IBC qualified under the New York Stock Exchange rules. So that's something interesting. Just that the SEC gave some sort of pushback or discussion. They simply abandoned it, and now they're moving towards the PS, but they're still continuing with that transaction. And Pershing Square, the parent company, is planning on continuing with that merger. Now, this is interesting. They were valuing the Pershing Square, the Universal Music Group, at about 40 billion. And Goldman Sachs, they valued it at 53 billion. This was back in April 29th. So with a 10% stake, you were buying it about 4 billion. So Pershing Square was planning on buying the Universal Group, 10% of it at 4 billion. So that was basically valuing it at 40 billion, whereas Goldman Sachs was valuing it 53 billion. And the revenue that's expected from the Universal Group, well, because of COVID last year, especially the live concerts, they were all down, because of which they did take a hit in the revenues. But now with the COVID gone and almost gone, and all the live concerts coming back, the revenue will climb up, and 12.7 billion is what they're expecting. And that's something which is nothing but almost less than 3.5x times of the revenue. So that's a very good deal in terms of the valuation of the company. And this gentleman simply just canceled or striked off the plans of PSTH. But he's still buying it because he finds it still valuing. But yeah, the shareholders are not going to get anything out of it. Yet, despite the inability of PSTH to consummate the UMG transaction, our counterparty was not left at the altar. Counterparty is nothing but Vivendi. Pershing Square will be fulfilling PSTH's commitment to Vivendi. Pershing Square intends to be a long-term UMG shareholder and will endeavor to work with UMG management to help create value for stakeholders. And we know that UMG is also going into the public market. That's something which he has pointed out also, that if you're interested, go and buy it from the public market later when it comes into the stock market, the Euronext Amsterdam in September. So this is what he's saying, basically. UMG will become a public company when it is listed, and that's when you can, if you need it, basically not respecting the shareholders that went for him. But again, just want to share this with you. Not a pretty news to share, but something to let you know what's going on. With that, take care, stay safe, bye-bye.